So the aging population, to some extent, you know, demography is someone that is predictable, and you wonder why is it that we always need a kind of sense of urgency to move. So my idea today will be to share with you 3 ideas that we have had at the insurance industry, you know, CLHIA. But in order to get there, I'd like just to explain to you a bit more what is that industry and what are the challenges that we are facing. Because everything is not necessarily positive. I'm sure you are facing challenges, and it is the same for us. So the good news, you have seen great demonstration with the crisis in 2008. Everyone was saying that they were a strong country, strongly regulated, strong financial institution, but the fact is that Canada has demonstrated in 2008 that it was right. It was right for banks, and it was always right for insurance companies, and it's a mix of good regulation, but it's also a mix of the fact that Canadian executives, generally speaking, I guess, are more prudent, they are more conservative than perhaps in some other countries. So this is the good news. We have challenges, but we have a sound system to face those challenges. So the insurance industry, we call it, you know, the acronym is CLHIA. We are very inclusive. Big consensus, 99%. Still trying to find that remaining 1%. But my point to you today is that when I'm talking on behalf of the industry, I'm talking on behalf of almost every single player in Canada. Who are we? And you know, how big are we? And sometimes it's difficult because people don't see the difference between, you know, 10 million or 500 million. But I'd like you to remember 3 things. The first one is that we own, as the industry, 10% of all government bonds that has been issued over the decades. And we own 15% of all the corporate bonds that have been issued in Canada. And if you were to focus only on long-term investment, because we do a lot of long-term investment, it will be even bigger than that. The second thing that I'd like you to remember is that when we say that we serve 26 million Canadians, it means that we serve low-income and middle-income people who badly need insurance to plan for the unexpected expenses. Some people might think, you know, that the insurance is only for rich people. To the opposite. To some extent, it is the low and middle income people that need a device to plan for the unexpected. And the third element I'd like to share on that slide with you is somehow we might have the reputation that at the time of claims, we are not necessarily there to pay. We pay $1 billion a week. $1 billion a week in claims, all the insurance industry in total in Canada. So I guess that we might not be known to be that important for the Canadian economy. We are talking about over 100,000 staff. Now, the other thing that is not known about the industry is that we are a great success story internationally. And the success story is not coming from one champion. It's not one potash corporation or one research in motion. When you look at all of this, outside of Canada, we have 40 million customers. It is 1.5 times more than the customers that we have in Canada. We have more customers outside of Canada than in Canada. We have customers in 20 countries. And in fact, when you look at this, among the top 15 insurance companies worldwide, 3 of them are Canadian. Just try to find another industry where 20% of the leader worldwide will come from Canada, who represent 3% of the world economy. So this is why we are only number 4 at Industrial Alliance. So the 3 others are Manulife, Sun Life, and Great West, and we call it in our organization the Big 3. But this is, I think, something that we should talk more, that we have a great story internationally. Now, Before we talk about the three ideas that we put together in the insurance industry, I'd like to share with you two challenges, and to some extent they are related to pension, the aging of the population, and the cost structure. The first one is the interest rate issue. And I know that for all you guys, you are pleased with low rates on mortgage loans. Here I'm talking about rates for 25 years, 30 years, Canada bonds, and provincial bonds. And the second issue is the regulatory environment. So let's look at this slide. So on this slide you have two indicators. You have the long-term interest rate in Canada, 30-year interest rate, 30-year long. 10 years ago we were talking about 6%. It went down and down and down all the way during the last decade. And on the other side though you have the TSX, the stock market. The stock market was going up. So one of the issues we are facing is that normally these two risks, they cancel each other. They go in the opposite direction. So we gain money with one asset class and we lose with the other one. When we had some trouble in Q4 of 2008, you could see the speed at which the TSX went down, and at the same time, the long-term Canada rates reached a bottom level, 3.48%. And then soon after it has improved, but then what happened? 2 years after, for a second time in 2 years, the long-term Canada bond rates went even lower, 3.38. So you wonder, if it was only a blip, but now it was kind of 2 times in 3 years. And then in 2011, during the first 6 months, everything was fine. Rates was going up. On December 31st, 2011, 2.52%. In Q4 alone, those rates went down 40 bips, while they remain completely stable in the US. So to some extent, Canada is perceived such a great country that even UK financial institutions prefer to invest in BC bonds, Ontario bonds, and Quebec bonds than to invest in some other government bonds in Europe. So those long-term rates are difficult for the insurance industry, mainly because of a relatively punitive accounting regime under which we have to assume that that rate will remain the same for the next 20 years. Forget about averages, all our reinvestment will have to be made at that rate. And I thought I should share that slide with you, because when we will be talking about everyone pension, it's a bit the same issue for every Canadian. They have to decide where is it that they will be investing their money. If you invest in long-term Canada bonds, you are talking about 2.52%. The other issue that we are facing is the regulatory environment. And there, the first element that I put there was the capital requirement. And I could assure you that, the Canadian regulators have been steadfast in ensuring, that the Canadian regime would be very secure, would be strong. But the fact is that people are so proud that we have been successful during the 2008 crisis that they say, perhaps I should demand for even more capital, because I would ensure, that there would be no crisis, no failure, no nothing. It's right, but at the same time, people have to realize that there is a cost of capital associated to it. So right now, one of the issues we are facing is to find that balance between, security and cost of capital, because at the end of the day, customers have to pay for that cost. The second issue are the international accounting standards. As you know, in Canada, we are not talking about GAAP anymore. For public company, GAAP does not exist. We are talking about IFRS. And for the insurance industry, the first phase has been implemented at the same time than all the other industry, but the second phase will come either between 2013 and 2015, and it will concern the actuarial reserve. And I've told you already that the Canadian regime was punitive because we have to assume that the spot rate will remain the same for 20 years. One of the ideas that they have on the table worldwide is to say that that low rate will remain forever, not 20 years. So it's even more punitive, and the fact is that Canada is different than most other countries in the sense that we provide a lot of long-term permanent contract to citizens. A lot more than other countries. So the impact on us is more important, and it's a bit awkward that we have 3 leaders out of 15 around the world, but at the end of the day, we could hardly influence those standards. So yes, we would like to offer the long-term guaranteed product to Canadians, more so when there is a lot of volatility in the equity market and the interest rate, but at the same time, we will have to live with new accounting standards on which there is still some uncertainty. So, in the background of that, we said, listen, we know that we are issues facing the industry, but there are issues facing Canadians, and we have wondered, what is it that we could do to help solving those issues. So today I will be talking about pension, drug costs, and healthcare. If you take the first one, there is a new acronym coming in town. It is the PRPP. And what is the PRPP? I should have told you that in the insurance industry manage about 2/3 of all the pension plans in Canada. So we are very central to it. I told you that on the retail side, we are doing a lot for low-income and middle-income people. On pension, the idea is to help the small and medium-sized businesses. In fact, what is happening here is that most large employers could afford to have their pension plan. According to the Canadian tax regime, the employer has to be the sponsor of the pension plan. So it is administratively costly. You need to have a lot of employees to afford that. So small and medium-sized employers could hardly have those plans. So the idea was quite simple. It was to say, tax-wise, let the Canadian government agree that the sponsor does not need to be the employer. It just could be the financial institution who will take care of everything, and in doing so, we could put a lot of different groups within the same PRPP. And at the same time, it's going to be portable. If an employee changed job, he could keep his pension regime, because the pension regime is not tackled to the employer. And to ensure the promotion of it, we told the different government, listen, you could even go one step further. You could mandate employers to say, you have no option than to offer the plan to your employees, and then they might decide to opt out. So far, the federal government has agreed to do their piece, which is to change the tax rules, and then it's up to each province to decide how fast they will be implementing it. Right now, everyone is positive about doing that. The first province that may go on might be Quebec at the next budget. They'd like to do that. They prefer that option than to improve the CPP and the QPP. And it's going to be up to each province to decide whether or not they mandate the employer to regime, so that the employees will have to make an action. The action will be to say, I opt out. And we thought, the insurance industry, that it's going to be the best way to promote savings to Canadians. So the idea is relatively simple. That exists in the US. And mind you, it took us 3 years to convince everyone that it was a good way to go, and a better way than to improve, again, the CPP and the QPP, just because of the accumulation burden on governments. The second issue is drug costs. I told you at the beginning, the insurance industry is taking care of low-income and medium-income people. The pension would be good for small and medium-sized businesses. Now, what is happening with drug costs? Some of them are extremely expensive. And again, if you are a large employer with 1,000 employees and more, it's relatively easy to accept some odd cases of employees whose bill would be very important. Now, what we know is that when we look at the trends, we see that those expensive drugs will continue, to increase a lot. According to some specialists, they are saying that the average price of some costs will increase by 2.5 to 3 times in the next 4 years. So all those new drugs, they are great, but at the same time they are expensive. So the idea that we put together in the insurance industry is to say, listen, and that exists in some territory in Canada. We have just decided, you know, that the full insurance industry will put together a sharing mechanism for those expensive drug costs. Meaning that if an employee has some bills that are above a certain threshold, those amount of claims will be put in the pool, and then it's going to be shared by all the groups that we have in Canada. So, and obviously one of the issues we're facing is that when an insurance industry is working together to develop like this a pool mechanism, you have to make sure that competition remains. So we have had a lot of hurdles, legally speaking. We think that we have found a solution for all of them. So soon, you should expect the insurance industry to say, the government doesn't need to be involved to pay for the expensive drugs for Canadians. We in the private sector, we think that we have found a solution. Now, the third issue has to do with healthcare. So, let's face it, we all want universal healthcare. But there are different ways to get there. Some people are nervous, you know, that the private sector will play a bigger role. But at the same time, I'm not aware of anyone saying that the role that the private sector is playing right now is too big and that they should exist. You have on the slide, you know, all the services that we are providing. We provide, you know, dental care, prescription drugs, ambulance fees, private rooms, we pay for that. Is there anyone saying that the private sector should stop paying for private rooms? You know, if you are sick and you have to have some place for yourself. So the thing is that our role has been complementary, will continue to be complementary. In everything we have been doing so far, people were pleased. And the question is, you know, could we find a better balance to that? Right now, the public sector is paying about 70% of the total cost. The economy is growing between 2 and 3% a year, and the costs are increasing between 5 and 6% a year. So we know that it's not sustainable. So how is it that we could do to the next move to be pragmatic instead of being, you know, dogmatic? So what we think that we should do, and again, we have to accept to have a debate on this. We will continue to be complementary, but at the same time, if only governments were able to share with us, Canadians, what is it that they will pay in the long term, it will allow Canadians to decide the pieces and the product that they could buy so that they could protect themselves or something else. There are two products that are increasingly used in Canada. One is critical illness and the other one is long-term care. As long as Canadians will think that the federal government will always pay for those claims, there is no motivation for people to buy those contracts. If only the federal government was to say clearly what they will finance and what they will not finance, then Canadians might become more responsible. And the benefit with those products is that so far, we have a pay-as-you-go system in Canada for health care. But with the aging of the population, a lot of people are nervous about the future cost of it. So what we like and what we have offered to the government is that if you precise what you will offer, then those products like critical illness and long-term care that are not pay-as-you-go, you finance them for the long term, you could have a better motivation for Canadians to invest in those products. And we even told the government, you have a premium tax on everything in Canada. If you just decide to remove the premium tax on those new products, You will not lose any money to start with because you are not collecting a lot right now. But there will be an additional incentive for Canadians to plan for their health care. So we would like, in fact, to consider, we would like the government to precise what they are willing to pay so that Canadians might more easily decide the piece where they better have to pre-finance them. So you could see that in those three suggestions that the insurance industry is certainly a natural partner to Canadian and the different government, facing tough budgets. One word about Industrial Alliance and those elephants. Why is it that there are elephants in BC? I told you that in Canada there was 3 big insurers. We are number 4. You could see at the bottom of that slide, premium deposit about $6 billion. We are a relatively large employer and financial service company in Canada. And in fact, when we say that we are number 4, we try to be disciplined and look at our rank everywhere. So you could see on the far left that retail insurance, which is the core of every one operation, that's where we are number 4. And just beside, we have our number 1 on that slide. We have 1. It is in the seg fund. It's not a mistake. Market share is 35%. This is the market share of the net sales of our organization in Canada in 2011. What I like, generally speaking, concerning this slide is that the first line is about our in-force, all the operation that we have, whereas the second line is about the new blood, the new business. So you could see that everywhere the market share about new business is greater than the market share of in-force, meaning that we have relatively good momentum. But the best slide is this one. Because when I joined this company in 1979, it was 100% in Quebec, nothing outside of Quebec. And in 1992, we decided to grow outside of Quebec. We have bought the 2 life insurance companies that existed west of Winnipeg. Both of them were in Vancouver. Northwest Life in 1982 and Seaboard Life in 1998. So this is why we have a relatively strong presence in Western Canada, because you compare with Ontario, 23-29, it might be in a decade that Western Canada for us would be larger than Ontario. So I'm not responsible for that turnaround. I'm the 3rd president executing the same business plan to say we want to become a Canada-wide organization. And lately we have been making good progress, because what I've tried to show on that slide is the change during the last 5 years for some of the businesses. So you could see that for wealth management, for example, we now have 68% of our sales outside of Quebec, and it was 42% 5 years before. So huge change. Employee plans, we had almost nothing in Western Canada, only 11% of sales. Lately, we were at 26%. Group retirement and saving, the pension plan, the PRPP, we'd like to participate in there. We had 18% of the operation outside of Quebec in that line of business, and now it's 37%. And in total, right now, we have 60% of our operation outside of Quebec, and every year, that percentage is growing by about 2 points per year. So our objective is to reach 78% so that it's going to be comparable with the percentage in terms of the split of the population between Quebec and the rest of Canada. So in a nutshell, why is it that we have been relatively successful? I think we have been able to be profitable whatever the economic scenario, and certainly 2008 has been a good demonstration. We have a good growth strategy. We'd like to grow, but at the same time, we ensure that we are realistic, because we are a financial institution. We have a fiduciary responsibility. We have to make sure, that we never play with the financial strength. And obviously, the last element that has differed one player from the other lately has been risk management. You saw those huge swing of interest rate, stock market, it is relatively difficult to decide, you know, what will be the future, what are the different what-if scenarios, and what is it that we should be protecting ourselves. So the last message about Industrial Alliance is to tell you that we are more than a traditional life insurance company. On the left side, you see the natural operation of a life insurance company. And for us, that accounts now for 71% of our operation. We have moved to non-traditional operation for an insurance company, like a mutual fund broker dealer, a mutual fund manufacturer, a creditor business with car dealers. All those operations are not necessarily typical of a life insurance company, so that in our growth strategy, we have tried to find not only where was the potential, but also where was the competition, and in terms of the net of the two, where is it that we were seeing place to grow. So this is a small report on the fourth largest company in Canada. So if we conclude, what are we saying? We are saying that the insurance industry could do a lot of things to support the aging population. We have done some proposals. We have been able to convince the government on pension. We have been able to convince ourselves within the insurance industry that we have to find a solution for the expensive drugs, and we'd like to participate in a pragmatic way to the debate in Canada concerning the future of health care, so that we do believe at the end of the day that not only we are a natural partner, but we could certainly help everyone to make sure that Canada would be an even better country, financially speaking. Thank you.